Guys, I want to walk you through TradingView and show you some simple chart reading fundamentally. So what we've got here is TradingView. It's a platform where you can ultimately go to place your trades and view what's happening in the markets. I've got Apple here as a chart that's loaded up. You can see Apple Inc. NASDAQ market. It's currently open, I believe, as you can see. And then if we have a look at what we see in front of us, we've got red bars and green bars. So green bars is when the open is lower than the close, or rather the close is higher than the open, so it's going up. And then red is for when it's going down. So then you've got the wicks here, which shows you when people attempted to buy or sell. So that's and ultimately there were people that weren't buying or selling at that level. So let's have a look at some of the candles to give you a sense of what we can see. So there's a strong Marubozu candle here. So a Marubozu candle is when people pretty much buy at every level or sell at every level. So this is selling at every level, which then predicts or suggests there's a strong ultimately pressure to sell off these stocks at this price point, which suggests that the market is going to keep going down. And as you can see, over the next several days, it does indeed go down. This is looking at a daily chart, by the way. So that's an example of where you can see a Marubozu, which is a ultimately strong signal for buying or selling. And you'll see that there are some other candles where there's smaller wicks, but generally speaking, whilst it goes to that level of low and people don't sell off, people are almost selling at every level. So you'll see that at every level, there's someone who is selling. And then what you want to also consider with Marubozu candles, because it typically indicates a strong signal of a trend in the market. People talk about trend being your friend, but what you'll also need to understand is that you should never view these things in isolation, because you should contextually look at what ultimately is next to the candle. So then alongside that, you've got momentum candles. So as you can see here, so this now suggests, if you see, that they're attempting to, so it still did, as you can see. So if you compare these two, this is a momentum candle, which suggests also it's quite an interesting signal. So this is a strong buying signal, okay? But then here, people are still trying to raise the prices, raise the prices, raise the prices. So it did close higher than it opened. There's a significant area where people tried to sell and people didn't buy. So that suggests maybe then there's going to be a change in the other direction, because there's strong, ultimately, selling, or there's a little bit more pressure to sell off, because there's people that are not buying. And as you can begin to see now, you notice here that there's changes that are happening. And to that extent, then you'll see that there are also, for example, hammers. So hammers are when you've got a strong buying signal at the top, but people try to sell it as low as possible, but people weren't buying. So whilst it closed lower than it opened, as you can see from here, this of all of these four, as an example, comparatively has the biggest wick. So this would be a hammer. I've got some notes here as I'm still learning this process, but this would be a hammer, and therefore it suggests that, okay, there's going to be a change because people are trying to sell off really slow. It's really low, like the farmer who's trying to sell at 10 cents, 20 cents, and people aren't buying. So then finally people start buying, but it suggests there's going to be ultimately a bit of a reversal, if you will. And then you'll see there's a Doji candle here where the market's a bit confused by what's just happened. And then you can see again that there's now momentum going the other way, because you could argue this is two Marubozos, which might suggest then you enter here, and then as you can see over the next couple of days, it does, there's some confusion, but it does actually tend to go up. So you begin to identify patterns such as this, okay? And then with a shooting star, if this is the hammer, the shooting star is up in the other way. And that suggests it's going to be ultimately a downward trend, because with a shooting star, people are trying to sell at higher prices, but people ain't buying. People trying to sell at higher prices, but people ain't buying, which means it goes to sell at a slightly lower price. Now, you can still see here, it almost goes from a hammer to a shooting star. So there's a bit of a reversal. So again, none of these things can be looked at in isolation. There's always a consideration of what's happening around it, but these are some useful patterns that you can see. So there's a gap up here because there's an earnings report that came out, which then causes the price to basically jump up, but then it comes down slightly lower than wasn't expected. And as you can see now, there's some confusion happening. We've got a Doji candle, and then we've got here a hammer, which shows ultimately that people trying to sell really low, but people weren't ultimately buying. At that point, it was too cheap. People weren't buying, and then finally they started buying here, and then the market closed, which suggests that maybe there's going to be an upswing. So yeah, these are some insights into some of the basics of reading charts and reading candles. Thank you.